Morning, Steve Ray in Chicago with the morning grain comments. Well, the markets were pretty much steady overnight. We're dealing with two issues in the grain markets. Number one is the USDA report tomorrow. Number two is the weather. As far as the USDA report is, the market's expecting about 1.6 million more bean acres than the March intentions, and maybe a little bit less corn acres. I think the key is farmers had some time between the March intentions and the soybean rally to plant more bean acres. So the surprise could be higher bean acres. Also, the stocks numbers, as of June 1, all corn, bean, and wheat stocks numbers should be above a year ago. As far as the weather is concerned, we're having a lot of conflict between the European model and the American model. The European model tends to do better in a dry year and shows more net drying over the next 30 days than the American model. Yesterday, the American model put a blog of rain across southern Iowa, central Illinois, and central Indiana for early next week and caused the market to kind of back off, especially in the corn. Today, those models have kind of compromised a little bit with maybe a little less rain than the American model, but the European model is showing some spotty showers. The big thing is that the European model and the American model keeps the heat, hot temperatures in the four corners of the southwest United States. So if I'm a corn plant, this is a good forecast to get me through pollination. We have a 3-day weekend ahead of us, and so that's usually some fireworks on Monday night or Tuesday morning, depending upon the weather. I think personally, as far as the beans are concerned, if we have a negative report and we're down hard, I would be looking at buying September calls in case the market rallies because of this record demand that we're forecasting September through February. As far as the corn is concerned, if we have a good corn crop, you look at the D16-17 spread, it's pretty much even money right now. And historically, as the funds start getting out of their positions, you can see D16 lose to D17 and put a little bit of carry in the marketplace. So that might be two opportunities for you down the road, looking at soybean demand and looking at a normal corn crop. As far as the outside markets, dollar index, copper, all easier, euro, pound, yen, crude, gold, silver, soft markets are a little bit higher, treasuries are mixed, and world stock markets are higher. So we're trying to get past the BRIEX, and everyone's trying to focus on post-BRIEX and that maybe the economies will stabilize, and there are countries talking about stimulus and trying to get the markets back going again after this unprecedented vote. There are some analysts, though, that think that over time, this is still going to hurt the financial markets, and so we have to be cautious about how those markets trade. So we've got the USDA report tomorrow at 11 o'clock. We'll be a lot smarter than we are right now. We got a 3-day weekend, so Monday night and Tuesday should have some fireworks depending upon the actual weather. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.